The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
The Securities and Exchange Commission is charging Terraform Labs and Kwon with fraud, selling unregistered securities and selling unregistered security-based swaps. Well, that's a lot. Joining us now to discuss is former CFTC chair and Harvard Kennedy School research fellow and director of digital assets policy of the Digital Assets Policy Project, Timothy Massad. Welcome back, Chairman Massad. It's been a long time no see.
Yes, good to see you, Lawrence.
So what's your reaction here to the SEC's charges against Kwon and Terraform?
Well, I think they were absolutely right to make these charges from what I have read. When you solicit people to invest in a token by promising them a 19 to 20% return, that's a security. It doesn't matter that the way you obtain that is depositing your tokens into a smart contract and so forth. Similarly, when you basically market Luna as something that can be obtained by exchanging Terra, and that the value of Luna will also increase depending on sort of various actions that are taken, I think that's also a security. The industry often complains about lack of regulatory clarity, but you just need to have good lawyers who can read the law and say, yeah, that's probably a security. I think there are other areas where we need clarity and where we need a comprehensive framework. So my only concern is that while I support stronger enforcement, I would also be very much in favor of creating a more comprehensive regulatory framework, particularly so that we can take advantage of the opportunities with something like stablecoins. Stablecoins, to me, pose both risks and opportunities, and we're not seizing that moment.
So there's one other stablecoin that's in use, of course, and that's Binance USD BUSD, which is issued. The original form is issued by Paxos. However, there's a pegged form that seems to have been issued by Binance, which is supposed to hold BUSD in escrow. It's almost as if it's a stablecoin built off of another stablecoin. Right. Do you think the SEC, we don't know the full details of exactly what they're looking into here, but do you think that the SEC has any reason to be concerned about BUSD or pegged BUSD? Which one should they be concerned about? Which one should be fine?
Yeah, on this one, all we have is the fact that the SEC has issued a Wells notice. So we don't have a complaint yet. We'll really have to wait and see what their charges are. The NY Department of Financial Services has also brought an action against Paxos with regard to this one. I think the state concern does have to do with the fact that this was being traded on a blockchain that NYDFS had not approved, and they had some concerns about that. But when I was saying earlier we need a framework, I am speaking of stablecoins that are pegged to the dollar and backed by cash or treasury securities, unlike Terra. Binance, the BUSD coin was meant to operate that way. And I do think we would be better off if we could create a framework, because here we have when you look at what the U.S. government is saying on those, on the one hand, we have the Treasury saying stablecoins should only be issued by banks. On the other hand, we have the bank regulators saying banks shouldn't issue stablecoins. And then now we have the SEC, who may be arguing this is a security because of some particular aspects. So I think we do need a framework there, because I do think stablecoins that are backed by cash do pose opportunities as well as risks.
Yeah, you were the co-author of the white paper back in August that focuses on putting the stable in stablecoins. I guess,
right.
How do we go about doing that? Where does the industry go from here?
Yeah, exactly. I mean, what we wrote about, and I did this with two law professors, Hal Jackson at Harvard Law School and Dan Oury at Cornell. What we argued is, while legislation would be great, we don't need to wait for legislation. The bank regulators have the ability today to create a framework that could basically license stablecoin issuers, require that the tokens be fully backed by cash or treasury securities, impose requirements for capital and liquidity, and impose requirements on how stablecoins are traded, where they're traded, what chains they're traded on, making sure those chains have adequate resilience and procedures. So they could do that today, we believe, because while there have been those in Congress who have called for legislation, there's not yet a consensus on legislation.
So another thing that just happened, of course, is what happened with Kraken. It's virtually a swap for fixed for floating. Seems to have gotten under the skin of the SEC, and they put an end to it. How should such things like staking as a service be regulated, if at all? Is it really a security? Is it a type of swap that maybe could be sold to the retail customer? And is there a way out for people for companies to offer staking as a service, or is it just something that's just beyond the pale for them?
Right. Well, when you read the Kraken complaint, you see that the SEC does cite a lot of particulars about the Kraken program, which I think clearly did make this solicitation of an investment contract, if you will. I mean, Kraken was soliciting people to deposit their tokens in return for essentially a return that a profit that Kraken would pay that wasn't necessarily equivalent to what Kraken was earning. Now, are there ways to set up staking programs that don't do that? We'll have to see. I think, if it's direct staking that's not going through an intermediary, because, when you have an intermediary soliciting people to do that, that clearly puts it into the investment contract category. So it will take some time to work out. But again, what we've seen over and over with the industry is there is an enforcement action, and yet similar sorts of things are not then immediately reevaluated. When the SEC settled with BlockFi, which clearly, was a charge that this kind of lending service violated securities law, we didn't see all the other lending platforms then revisit what they were doing and walk into the SEC, as far as we know, maybe they did, to say, well, how can we do what we're doing in conformity with the rules? So the industry does need to step up. I agree there's some need for clarity in certain areas, but I think the industry also needs to be a little bit more forthcoming on compliance.
Yeah, well, the Office of the Comptroller of the Currency Chief Michael Hsu has previously said that the crypto industry has an unhealthy dependency on hype. So how can regulators better protect investors?
Well, I think we've seen a lot of that too. Look, once again, I think we need both stronger enforcement and more of a comprehensive regulatory framework, because I think, if we had adequate, investor protections with respect to trading platforms, so that they clearly are required to prevent wash trading, clearly are required to ensure that the tokens they're listing are not securities, that we have adequate disclosure, you would take some of the hype and speculative air out of this market, which would be a good thing. And then maybe we could focus more on developments that truly are innovations that can help improve our financial system instead of just speculative investments.
All right, Timothy, thank you for weighing in. That was former CFTC chair and Harvard Kennedy School Research Fellow and Director of the Digital Assets Policy Project, Timothy Massad.